On the previous video, we learned about the basic information we can get from a candlestick by its body and upper and lower shadows. Now I'd like to show you how in addition to that we can get even more information from very basic patterns of even one single candle. We do that by measuring the relative size of its body and shadows, which tells us about the balance between buyers and sellers. First, let's talk about the Marubozu. A Marubozu candle either doesn't have at all or have really small shadows and is represented mostly by its body. This candle gives us important information as it tells us who is in control during the last time period. A green Marubozu considered to be very bullish as it indicates that buyers were controlling the price right from the opening all the way to the closing price. And the red Marubozu considered to be very bearish as it shows us that the sellers were more dominant. In both cases, the price is now at some kind of peak or bottom. It can be a strong sign for the near future, especially when combined with other patterns and indicators. And now we have the spinning top, which in opposed to the Marubozu has a really short body which is located in the middle of relatively long upper and lower shadows. As you can see, the opening and closing prices are close to each other, so on the bottom line, price hasn't changed much. But it is important to see that what happened before that was a strong fight between buyers who tried to push the price higher and sellers who tried to push it down. Eventually, they settled somewhere in the middle. The main thing that spinning tops indicate is indecision. None of the sides is currently more dominant. So if occurring in the middle of a strong trend, it might suggest that there is a weakening and potential reversal. Now let's see candles with different shadow size. A candle in which the upper shadow is longer than the lower one tells us that probably what happened is that buyers were dominating the first part of the session, pushing the price higher. However, eventually, sellers were stronger, being able to push the price almost all the way back to where it came from. Now it's likely to continue downward. On the other end, a long lower shadow candlestick shows us that sellers were attempting to carry the price down, but then stronger buyers came and were able to raise prices and perform a positive close, signaling possible further increases. Doji candles remind spinning tops in the manner that their opening and closing price are close or identical. It indicates a balance between buyers and sellers or indecision. However, in opposed to spinning top candles, a doji candle does not depend on its shadows. It might have short or long, or even no shadows at all. It will usually come toward the end of a trend or during a consolidation when the market is neutral. The length of the shadows tell us about the battle of bulls and bears, and if one of the sides was able to gain momentum toward the end of the candle. For example, a long lower shadow doji indicates that price recently rose back to where it came from. Therefore, the buyers might be in control, while equal shadows represents a complete balance and indecision. Even though we can get a lot of information from one single candle, we can get even greater indication when it combined with additional candles. Look for example at the Harami candlestick. Harami can be measured only in relation to the candle that preceded it. When we have Harami, we only look at the bodies of the two consecutive candles. It occurs when we see that the entire body of the second candle is within the range of the first one. What it typically indicates is that the current momentum was halted. Let's assume, for example, that the first candle is bullish. If the second one is green as well, it means that bulls are still in control. However, the price went a bit lower. The buyers maybe won this fight, but it was a less decisive victory. If the second candle is bearish, then this is even a stronger sign for a potential change and reversal. Note that in both cases Harami is merely a small indication that need to be confirmed with the next candles. Engulfing candles. Engulfing candle is stronger than Harami. In both we have one candle that is smaller than the other, only this time the order is different. The second candle's body contains all the size of the first one and therefore engulfs it, as the name of the pattern suggests. Engulfing is a great indication for a reversal. It shows us that the battle between buyers and sellers was bigger than the last one, and that the victory was accordingly greater. Most patterns take 1 to 4 candles and are based on the candles we just introduced. In order to get higher probability signals, you need to combine them with additional confirmations such as volume and technical indicators, which we will cover in the next videos.